Good evening, everyone. So, myself, Priya Gupta, I am going to take your session for today. This is the second session for declaration and payment of dividend. We will be running through the basics of your corporate governance chapter, corporate and other laws chapter, declaration and payment of dividend. We will try to summarize what we have understood in our first session. And then we will be going through our concluding session, which is more of into the compliances part, that what will happen if we do not comply with the requirements of declaration and payment of dividend. So students, in the last session, in the previous session, we have understood the definition of a dividend, what it encompasses. We understood that dividend not only includes final dividend, but it also includes interim dividend. And what does interim dividend mean? It means anything which is declared within the financial year, but before the concluding and acceptance of the financial statements. So basically, in this overall chapter, what we will be covering and some portion which we have already covered in our previous session, we have covered legal provisions for declaration and payment of dividend. We understood conditions which need to be fulfilled before declaring dividend. A little bit more what we understood last time. Quick briefing. So what is dividend? Section 2, subsection 35 describes dividend, but it does not give a vivid description of what does dividend include, what does dividend mean. So it just says, and it enlarges the scope by just saying that it includes interim dividend also. Overall, what is dividend? Dividend is apportionment of some portion of profit to the shareholders who have put their stake into the company, into the organization. The company uses those funds and produces results, and those results are distributed in form of certain amount per share to the shareholders. Now, since this is a legal requirement, the company must abide by it. It should follow the rules and regulations laid by it. It should follow the procedure which is being specified, that within this many days, they have to deposit the amount. Within this many days, it must be dispersed. What would happen and what amount of penalty and prosecution, if any, or fines that can be levied in this particular non-compliance, we are going to discuss in detail today. Okay, so what is unpaid and unclaimed dividend? Section 124, we are going to deal with today. We're also going to deal with Investor Education and Protection Fund, and we are going to deal with punishment for failure to distribute the dividend within 30 days of stipulated time. And what is obviously the exemptions, that in what cases it can be exempt. So what is meaning of dividend? We have already understood. It is portion of profit. It includes interim. Then basically it is company's profit distribution to the shareholder. What are the prerequisites? That no dividend shall exceed what has been proposed by the board of directors. AGM will approve it, but it cannot exceed the amount which has already been declared by the recommended by the board of directors. It can be less or it can be equal to that amount. We had done these numericals already. So basically, types of dividend on the basis of time, we understood interim and final. We also understood the difference between interim and the final dividend. Interim, it is recommended by board, announced by the board. It is declared before the preparation of the financials, whereas the final dividend is when my financial year has ceased. We understood what are the legal requirements before we distribute it, and what can be done in case we do not have sufficient amount of free reserves for the purpose of payment of interim dividend. final dividend as it is we have described. We also understood the shares which are liable for the payment of the dividend. What are the different types of shares with respect to it? So basically, we categorize, although the category can be more, but we have understood that the basic category which is there for the purpose of shareholders distribution of dividend, it is preference share and equity share. Preference shares, as the name suggests, is having preference in comparison to equity shares. They will have preference with respect to dividend as well as the payment of capital. We are not dealing with distribution of capital right now. We are just dealing with the distribution of dividend right now. So with respect to dividend, preference shareholders will have benefit. So then we, again, preference share will have cumulative preference shares, non-cumulative preference shares. Cumulative preference shares, which keeps on accumulating its dividend year after year and till the point that cumulative amount is disbursed. Non-cumulative preference shares that will have the liability to be paid for that particular financial year. If it is not paid, it will not be carried forward next year. Equity shareholders, they will be getting their dividend only after the payment of the preference shareholders' liabilities. So classification, we have understood and revised. Preference shares, we have discussed. Equity shares, again, we have discussed. Now, we understood provision regarding declaration and payment of dividend. We must have free reserve. These free reserves cannot include our capital profits or notional gains or revaluation amount. It has to be used only after providing for depreciation and setting of the losses. Okay, so meaning of free reserves, we understood that any amount of unrealized gain or notional gains or evaluation of assets, all these cannot be considered as free reserves. That has to be basically free for distribution of dividends. Change in carrying amount of an asset or a liability recognized in equity will not be treated as free for the purpose of distribution of dividend. Now, all this we have covered. Capital profits not to be considered, losses to be set off, depreciation to be provided for. We also understood what is basically a reason behind providing depreciation. So depreciation is basically a charge. What does it mean when we say it is a charge? Charge means we are writing off particular asset and creating a provision, so that in case in future, when that asset gets worn off due to efflux of time, and we understood in detail what does efflux of time means even if the asset is not being used, it is still getting depreciated because of the time which is passing year by year or maybe months by months, months after months, right? Then we could have technological developments which are happening, and obviously third and most importantly, when we use an asset, it gets worn off. So all this is going to deplete the value of the asset. So if we do not decrease the value of the asset, what will happen at the end of the life of the asset? The liability will be the asset will be overstated, and my reserves will also be overstated because we have not set off the profits in terms of not providing the depreciation of the asset. And we may not be having enough amount at the time of winding up to pay off our shareholders. And in case it is not the scenario of or the situation of winding up, it's normal situation, then we will not be able to replace our asset because the value which that asset will fetch in open market, we are not having that value represented in our books. So basically the value which is represented in our books is not showing the correct amount that is representable with respect to market value. So then we also understood that transfer to reserves is not compulsory. It is optional. It is left to the discretion of the company, whether they want to make any provision, whether they want to make of a lower amount, or they want to make no provision at all for the reserves before declaration of dividend. Then we understood that what would be the consequences, and this is something because these are having criteria, and you have to remember these criteria for the purpose of taking up your whether scenario based questions or whether they are MCQs based questions. So basically, dividend declaration in case of insufficiency of profits, and the three conditions which have been given are to be remembered so that you are able to understood the scenarios which are presented to it. So condition 1 is that in case there is insufficiency of profits, the rate of dividend cannot exceed the average rate of dividend for the past 3 years. So we will calculate the average rate of dividend for the last 3 years. However, one exception to this rule is that in case the dividend has not been declared in the past 3 years, in any of the past 3 years, then this rule will not be applicable. So it says, however, this condition shall not apply if the company has not declared any dividend in each of the 3 preceding previous years. And previous years have to be considered necessarily backwards immediately preceding the year in which we are making the dividend. Condition 2 was that the accumulative profits which we are going to utilize from the previous reserves should not exceed 10% of the paid up capital plus free reserves as per the latest audited balance sheet. And the third condition was that the free reserves which will be left after setting up of losses, if any, and utilization of the reserves with respect to dividend should not get less than 15% of the paid up capital. And again, that has to be as per the latest audited balance sheet. Okay, so now let us understand the fresh part of it, which is what are the compliances part with respect to dividend. Till now, we understood what are the requirements or what are the basically what can be utilized, what all things can be utilized, what are the rates which can be fixed and approved with respect to dividend. Now we are going to understand that what are the compliances part which are required with respect to our depositing of for the purpose of declaration and payment of dividend. So what does section 123 subsection 4 says? It says that the amount of dividend, and we understood that dividend includes interim dividend also. So whatever the rules and regulations which apply for our final dividend with respect to final dividend, it shall also apply for our interim dividend. So it says that the amount of dividend, including interim dividend, shall be deposited in a separate account maintained with a scheduled bank. This is to be done within 5 days from the date of declaration. So basically, even if the company is having any specific bank account maintained for it, still they will maintain an account with the scheduled bank. It has to be necessarily with the scheduled bank, and it has to be deposited within 5 days from the date of the declaration of dividend. So we have discussed this thing last time also, a little bit we touched base this thing. So we understood from this numerical or MCQ that the authorized and paid up capital of Avantika Ayurvedic Products Limited is 50 lakhs divided into 5 lakhs equity shares of 10 each. At its AGM held on 24th September 2019, the company declared a dividend of 2 per share by passing an ordinary resolution. So when is my basically dividend declared? It was declared on 24th of September 2019. So I will count 5 days from here. So it must be deposited in a scheduled bank by 29th of September 2019. Now comes payment of dividend. So Section 123, subsection 5. I would always suggest you students that when you are trying to remember the sections, because sections do play an important role to present your answers in your examinations. So it will leave a good impact if you are able to substantiate your point of view with respect to the sections which have been mentioned in your modules or with respect to the syllabus which you are studying. So to understand and to learn them, always try to memorize in a chronological order or maybe numerical way, that okay, so this section subsection 1, this section subsection 2, this section subsection 3. So it will help you memorize and remember the sections very easily. So like if you will see 123.4 says depositing of amount of dividend. So before that we have also understood when we were seeing the summary initially. So sorry, we were seeing this portion wherein we have mentioned the sections. We have written that to subsection 35. It's a definition section. So it is a definition given. We can exclude this from the order which we were trying to understand. So 123 is declaration of dividend. Section 124 deals with unpaid and unclaimed dividend. Section 125 deals with IEPF. Then 127 deals with punishment. So this is coming in a serial way. This is coming one after the other sections. Similarly, within 123 also, you are seeing whichever sections are pertaining to your area, like 123.1, we are dealing with sources which can be utilized with respect of declaration of dividend. Similarly, we have come to the section 123, subsection 4, depositing of amount of dividend. Then we come to subsection section 123, subsection 5. It deals with payment of dividend. So whenever you are revising, just a small suggestion with respect to your especially subjects which have accounting standards, you call it, or you call it your law sections or income tax sections. You can always write down and remember the sections along with their headings, so that when you are revising whichever chapter, you revise those sections, and when you are revising it every time you are doing that particular chapter, so when finally you will attend your examination, you will remember it. It will be easy for you to remember it. You may make a better presentation of your answers when you are trying to present it with the sections portion. So section 123 subsection 5 contains provision regarding payment of dividend. These are stated as under: a dividend shall be payable only to the registered shareholder or to its banker. A purchaser of share whose name is not entered in the register of members cannot claim to be claim payment of dividend to him, though he might have made full payment to the shares, to the seller of the shares. So they are basically saying that even if the seller has got all his due amount and the purchaser of the share has complied with all the conditions of purchase and sale agreement, still if his name is not appearing in the register of members, he will not be liable for the payment of dividend, come what may be, right? Even if there is no dispute, even if the seller has got a full amount which was required as per the contract, still he or she will not be able to get the due payment with respect to dividend unless and until that amount, that name has been rectified and changed with the new purchaser of the shares. So we can just quickly go through this example. It says that the directors of East West Limited proposed. Okay, so let us use our board. Let me open it, and then we can just. Right. Okay. We have done this example. Okay. Payment of dividend. Okay. So it says that dividend has been, yeah. So the directors of East West Limited propose a dividend of 15%. So the dividend rate which has been declared is now they say that this is for the financial year of 17-18. Okay, the company announced 28th September as the record date of the payment of dividend. So record date was 28th September. So I think so we have discussed this towards the end of a section. So this was a little quickly I have taken it up. So I'm just taking up this again for the benefit of all so that we revise this provision and then we'll be moving ahead. So the dividend was approved in AGM on 30th of September 2018. Okay, Mr. Binoy holder of 2,000 equity shares on 31st of March 2018. Okay. Now he transferred these shares to Mr. Mohan. And this transfer was registered in the register of members on 18th of June 2018. So now you see that the AGM is happening on 30th September 2018, right? Record date is basically the cutoff date which is considered for the purpose of considering who are the members whom the dividend is to be declared. So it is 28th September. So basically Mr. Mohan was coming in the register of members name on because that was already registered on 18th of June 2018. So when the distribution of dividend will be done, Mr. Mohan will be eligible for getting the dividend. So it says that according to section 123, dividend shall be paid by a company only to the registered shareholders of each share. Record date is the date announced by the company for determining entitlement to the dividend. All those persons whose name is included in the register of members on that date shall be entitled to dividend. In the instant case, on the date announced by the company as the record date, Mr. Mohan's name is present in the register of members. That is, Binoy's name is not present therein. Okay. Therefore, the dividend should be paid to Mr. Mohan, who is registered shareholder on the record date. Okay. So now let us consider one more. It says that the board of directors of Sum Technical Toys Limited proposed a dividend at the rate 10%. Sum declared a dividend of 12% for the financial year 1920, and same was approved in the AGM on 25th of June 2020. Okay. Now, Nitin Jha was holding 1,000 shares. Okay. As on 31st of March 2020, but the same was transferred by him. But the same was transferred by him to Mr. Raj, whose name was registered on 20th April 2020. So basically, on 31st of March, this transaction happened, and Mr. Raj got these 1,000 shares in his name. Which date? The date was 20th April 2020. So basically, the AGM is happening before registration of shares in name of Mr. Raj. So therefore, when the dividend is declared, Mr. Raj will be getting the dividend according to section 123 subsection 5. So as I stated, students, although if you write the correct answers, you will be fetching marks, but when you write subsections along with the sections, it leaves a very good impact of your answers. So it is always recommended that in case you are remembering, but obviously the sections which you remember, which you are writing, should be the right ones. Do not make guessworks in making the writing the sections which are not correct. So as you will see in your modules, also you will see in your literature that it has always been cited with the proper subsections of the section. So according to section 123.5, dividend shall be payable only to the registered shareholders of the shares or to his order to his banker. Facts in the given case state that Mr. Nitin Jha, the holder of equity shares, transferred his share to Mr. Raj, whose name was registered on 20th April 2020. So when you're doing these kind of questions, you have to write all the dates so that you understand. It will take hardly, not even 2 minutes of time to come to the right conclusion if you write the dates very categorically and understand the sequence which you are running through. So first is that on 31st of March, Nitin Jha was having the shares. Nitin Jha transferred the shares to Mr. Raj, and Mr. Raj became the legal shareholder, and his name became legally rightful for claiming dividend on 20th April 2020. The AGM is happening after that, now on 25th of June 2020. Now, if I just reverse the sequence, let us see what happens. For example, I'm just trying to change the color so that we are able to understand the impact. Okay. Chalo. So now what would have happened that if Nitin was holding the shares on 31st of March 2020, date at which Nitin transferred the shares was maybe 30th of September 2020. AGM held was 25th June 2020. What would have been the situation? Who would have got the dividend? If I ask this question in this case scenario, obviously the answer would change and Nitin would get, because the shares are getting transferred after the AGM date. Okay. Now, third scenario. Let us consider third scenario. Third scenario, let us take that Nitin was having shares on, let us do here. Nitin was having shares on 31st of March. Okay. He transferred the shares 30 same date. Let's consider this date only, 20th April 2020. But the company did not register him as legal shareholder, maybe any reason. His name is not appearing in the register of members. So in that situation, in that scenario, when the AGM is held on 25th of June and the dividend is approved, he will not be rightful in getting the dividend. So these are the different scenarios, situations which can be considered while you are doing these type of questions. Now, dividends are payable in cash and not in kind. So if suppose we say that that the dividend was declared in form of some category which is not quantifiable, or so which is not maybe payable in cash, or which is not monetary in nature, that will not be considered as substitute for dividend. Dividends are payable to the shareholders in cash and may be paid either by check or a dividend warrant or through an electronic mode. So it could be you give in check, which is the remote and the old-fashioned way of giving the dividend, or it could be dividend warrant or through an electronic mode transfer. So most of you who are already gone through or may have seen in your family that they have invested in shares, especially the bank shares, they remit their dividend in the form of electronic modes, and they're directly credited. They ask for your bank account details and they are directly credited in your bank account statement. Okay, so payment, this is the kind of summary. Payment payable either in cash or in check or in warrant or in electronic mode. Payable either to the registered shareholder and his name is appearing in the register of members, or to his order or to his banker. So if that person makes, he is maybe is out of India and he makes an order that his rightful dividend can be given to so and so, maybe his wife, maybe his relative, and that is in order as per the requirements of the company's disbursement of dividend, then that amount will be given to that person who has been authorized by that shareholder, or to his banker. So if he gives the name of the banker that the dividend can be dispersed to that particular banker, then the amount will go to that bank account or the banker. Nidhis, so this is a form of investment. So any dividend payable in cash may be paid by crediting the same to the account of the member if the dividend is not claimed within 30 days of the date of declaration of the dividend. So basically, dividend payable will be in cash, may be paid by crediting the same to the account of the member, and if it is not claimed within 30 days, if it is not claimed within 30 days of the date of declaration of dividend. So it's 6:35 by my clock. So let's take a quick break of 10 minutes and then we will resume at 6:45 sharp, and we will come to the next section of our this portion of law. You'll be doing the counting part? Okay. So we will resume our session now, and now we'll be focusing on prohibition or declaration of dividend. So basically, what are the criterions with respect to which the dividend declaration has been prohibited in law? So prohibition on declaration of dividend in the following cases of declaration and payment of dividend is prohibited. What are these? First is that prohibition in case of defaulting company. And how is this defined in the section? For this section, a company which fails to comply with provisions of section 73, that is prohibition on acceptance of deposits from public, number one. Number two, section 74, repayment of deposits, etc., accepted before the commencement of this act, 2013. And these shall not, as so long as such failure continues, declare any dividend on its equity shares. So what does this mean? So basically, who have not complied with the provisions of section 73 or not complied with section 77 with respect to acceptance of deposits from the public or repayment of deposits before this commencement of 2013 will not be allowed to give and to declare dividend to the shareholders as long as this failure continues. Okay. Second is prohibition in case of section 8 companies. According to section 8.1, a company a company having license under section 8, that is formation of companies with charitable objects, is prohibited in from paying any dividend to its members. Its profit are intended to apply only in promotion of the objects for which it is formed. So basically, Companies Act says that section 8 of the companies, which is wherein the company has been formulated with an objective of only charity, they cannot have the intention of generating profits and distributing it to the shareholders, because the basic charter of their objectives will not be met, wherein it has to basically not be profit earning organization, but has to be basically running the organization with the motive of the charity for the particular maybe particular part of the society, maybe for children's education, maybe for girl development, maybe for some other sector of the society. They may be running the charitable institution. So their objective is to promote, and their objective is to kind of pull that particular sector and not run the organization for the purpose of profitability. So now coming to the portion of unpaid dividend account, that is UDA account. So basically, the abbreviation which we use for unpaid dividend account is UDA account. So this flow chart in kind of summarizes the flow of dividend. So once the dividend has been declared, and let us try to do it in our Microsoft. So if I try to maximize it to my full screen. Okay, so first the company is declaring the dividend. Within 30 days of the declaration, it has to go in the dividend not paid or not claimed account. Now, after 7 days, it says deposit the unpaid or unclaimed dividend amount in a scheduled bank called the unpaid dividend account. So within 30 days dividend, if it has not been paid or not been claimed, 7 days from there, it will go to the unpaid or unclaimed dividend account. If not done, they will be entitled for interest at the rate of 12%. And in 90 days, it has been deposited within this scheduled bank account of unpaid dividend account, they need to prepare a statement with name, last known address, unpaid dividend account, and will be placed on the website of the company and on the website approved by the government for this purpose. And after the expiry of the 7 years, it will go to the investor protection and dividend fund, if I'm not wrong. Let's just scroll my just got stuck. Okay, no worries. Let's see here now. Okay, so within 7 years, it will go to the investor protection and dividend fund. I think so. There has screen sharing has been paused. I'm resharing again. Yeah. Okay. So this is what the flow chart looks like for my unpaid dividend account. Now, understanding the provisions in detail. Section 124 of the Act contains a provision regarding the unpaid dividend account, the UD account. These are as follows: the unpaid or the unclaimed dividend. If the company has not been able to pay the dividend or that has not been claimed. Non-payment could be that the person is not traceable, or his bank account is not correct, or his name is in conflict with what the credentials are appearing, and all these stuff. That in then case it remains unpaid or unclaimed dividend, then it has to be transferred into the unpaid dividend account. Where a dividend has been declared by a company but has not been paid or claimed within 30 days from the date of declaration, the company shall within 7 days from the expiry of such 30 days transfer the total amount of unpaid or unclaimed dividend to a special account called unpaid dividend account. So dividend has to be claimed or paid within 30 days, that we saw that it has to be paid and claimed within 30 days. If it is not done within 30 days, within 7 days of expiry of 30 days, it has to go to the scheduled bank, and that nomenclature has to be unpaid dividend account. That's what they're describing here. The UDA shall be opened by the company in any scheduled bank. In any scheduled bank, but that has to be a scheduled bank. It cannot be a normal account which is already operational with the organization. Preparing of statement of the unpaid dividend. Within 90 days of transferring any amount to the unpaid dividend account, the company shall prepare a statement containing the names, last known addresses. So while last known, maybe that in case of shareholder whose name is in conflict, or who is not already having the right address placed with the company, or maybe has shifted to US or any country outside India, and his credentials are not coming correct, and or the bank account which he has mentioned that this has to be given in this particular banker, and that banker is not accepting the facts which has been shared, whatever may be the reason. So in all those scenarios, this will be last known addresses and the amount of unpaid dividend to each of that person, and place such statement on the website. So this statement shall be prepared, and this statement shall be put on the website of the company as well as the approved place and site of the government, central government. Payment of interest if default is made in transferring the amount. If any default is made in transferring the total unpaid dividend amount or any part thereof of the unpaid dividend amount. It says even the part of it which has not been transferred to the said account, an interest rate of 12% per annum on that amount, so not transferred to the said account, shall be charged. So if the interest accruing on such amount shall ensure to be available to the benefit of the members of the company in proportion to the amount remaining unpaid to them. So proportionate amount which has not been paid, then on that amount interest at the rate of 12% shall be levied and same shall be deposited. The claimant to apply for payment of claimed amount. The person claiming to be entitled to any money transferred to the unpaid dividend account may apply to the company concerned for payment of the money so claimed. So any person who is claiming can apply to the company for the amount remaining unpaid with respect to the shares held by him or her. Then the next clause says transfer of unclaimed dividend to investor protection and investor education and protection fund. Any money transferred to the unpaid dividend account which remains unpaid or unclaimed for 7 years from the date of such transfer shall be transferred by the company along with interest accrued thereon to the investor education and protection fund. Further, company shall send a prescribed statement containing the details of such transfer to IEPF authority, and in turn authority shall issue a receipt to the company as evidence of such transfer. So let us also try to understand what is the background by where there have been so stringent rules and regulations being put in place. So this amount is basically of the public, right? So in no ways that the law can allow the company to use that money which is not getting disbursed to the rightful shareholders. So the company took the money from the shareholders, utilized that money to generate profits. The company was profitable. Then the portion of that profit had to go to these shareholders. Now, whatever may be the reason, public person who has, public person or public entity who has invested the money should get the portion of the profits on the amount that has been invested. The return on his investment is his dividend. So in no ways law can allow that amount not to be given to that particular entity or organization or maybe individual for that matter. So that is why all these stringent rules have been made so that the company is not able to take away the right of the rightful shareholders and his dividend. Right. So that is why it has been told within 30 days it has to be paid. If it is not paid within 70 days to be deposited with UDA account. If if the company is not depositing the full amount, the default will attract an interest of 12%. Furthermore, within 7 years of unpaid or unclaimed dividend, it has to go to the IEPF account. Now, after 7 years, it is going to IEPF account and then transfer of shares to IEPF account. All shares in respect of which dividend has not been paid or claimed for 7 consecutive years or more shall be transferred by the company in the name of Investor Education and Protection Fund along with the statement containing the prescribed details. Whatever are the last details available with the company, the company shall deposit that amount along with the details to the authority that has been stipulated with respect to this fund. Right of the owner of transfer share to reclaim any claimant of shares so transferred to IEPF shall be entitled to reclaim the transferred shares from Investor Education and Protection Fund in accordance with in with the prescribed procedure and on submission of prescribed documents. So whatever documents have been prescribed, whatever procedure has been prescribed, whatever the company may have put in some clauses, on the basis of that, any claimant can claim the transfer from this investor protection fund to reclaim the transfer of shares which have been done. Now comes the part, what will happen in case the contravention has been done with respect to these rules and regulations. So the time limits have been laid down, and the law says that if this has not been taking place within the stipulated account or in the same procedure as has been mentioned. So if it has been told that within this many days it has to be shifted to this UDA account, it has not been done, then what is the penalty? Or maybe within 7 years it has to go to the unpaid or unclaimed dividend, and it has been after 7 years it has to go to investor education protection fund and it has not gone, or it has to be kept in a scheduled bank, it has not been done. So all these are non-compliances. If a company fails to comply with any of the requirements of this section, such company shall be liable to a penalty. So it is not cumulative defaults that will attract penalty. It is that even if one contravention has been done with respect to these rules, it will attract penalty. And what is the penalty? It says a penalty of 1 lakh rupees, and in case of continuing failure, with a further penalty of 500 rupees for each day after the first during which such failure continues, subject to a maximum of 10 lakh rupees, and every officer of the company who is in default shall be liable to a penalty of 25,000 rupees, and in case of continuing failure, with a further penalty of 100 rupees for each day of the first during which such failure continues, subject to a maximum of 2 lakh rupees. So there are two penalties. One is with respect to the company. It says penalty of 1 lakh shall be levied. And in case this default continues, there will be a penalty of rupees, how much? I think so 500, they say. Every penalty of 5 years, 500 rupees each day. And this will continue over and above, subject to a maximum of 10 lakh rupees. Furthermore, if any officer is found in default with respect to this failure, then he will be liable to a penalty again of 25,000 and a penalty of 100 rupees in case the default continues after the first one, during which the failure continues, subject to a maximum of 2 lakh rupees. So these are the different punishment for contravention that has been done. If generally the law permits that in case the officer is able to prove his point that he was not party to this failure which has happened or this contravention that has been happened, and the law becomes okay with it, and that is proven, then probably he can be exempted. But otherwise, the law has put in this clause for both the company as well as the officer in default. Okay, so let's take a 5 minutes of break, and then we'll start with investor education and protection. Okay. So students, we were discussing investor education and protection. Why is this one second? Yeah. Investor Education and Protection Fund, IEPF. So before that, we understood that what all amounts can be transferred and when it will be transferred to Investor Education and Protection Fund. So idea behind creating this fund could have been that the amount which is not getting basically utilized by the actual shareholder, which is not getting dispersed, which is not getting claimed, that will after a substantial amount of time will go and be preserved in the form of a fund which can be utilized for investor education and their rights protection, basically. So if we see this background, we will see that this fund has been created to basically take care of the rights of the investors and their money by keeping it reserved in this or parked in this particular fund. So Section 125 of the Act, along with the various rules framed from time to time, including Investor Education and Protection Fund Authority, Accounting, Audit, Transfer and Refund Rules 2016 deal with Investor Education and Protection Fund. So basically, Section 125 of the Act, along with the various rules which are framed from time to time, he will keep into its domain this Investor Education Protection Fund, this authority, how the accounting, how the audit, whether the transfer, what are the refund, all these kind of rules will be dealt in this particular section and its rules. So it deals with Investor Education and Protection Fund. This fund being established by central government. So we can understand the amount of gravity it has because it is established by the central government and shall be credited with the specified amounts and utilized for refund of unclaimed and unpaid amounts, promotion of investor awareness and protection of interest of various investors, etc. So what could happen is that when the company is maybe a startup or maybe, not so much, has been existent for such a long period, then, it could be that the investors are small or they are not having such bandwidth to fight for their legal rights. They may not be even well educated to understand what are the legal formalities or legal rights with respect to the amount which is actually their amount. So in that scenario, this fund comes into picture and it helps in not only protecting the rights, protecting the unclaimed and unpaid amount, but it also kind of promote investor awareness. What are your rights? How can you protect their rights against the companies in which they have invested, and protection of interest of investors, etc. The relevant provisions are discussed below. So what are the various provisions? It says credit of specified amounts to the fund. The following specified amounts shall be credited to the fund. First, amount given by central government. The central government may, from time to time, disburse certain amount with respect to this investor protection fund. It may give some amount in form of donations for protecting the rights of the investors. Amount lying unpaid dividend account. So whatever amount, as we discussed, is lying in unpaid dividend account, that also get transferred to this IEPF account. Amount in IEPF, whatever the amount is already there. Income from investments. Now, this amount which is lying in Investor Education and Protection Fund can be invested from time to time into various investments as may be prescribed by central government or as may be prescribed by the rules framed under the Companies Act of this section, so that the fund's investment also earns income and that further can be utilized for the purpose of the objectives of this particular fund. Amount received through disgorgement of disposal of securities. Application money, the application money received by companies for allotment of any securities and due for funds only if such amount has remained unclaimed and unpaid for a period of 7 years from the date it became due for payment. So again, for application money also, this is applicable. It will be transferred only if it remains unclaimed, unpaid for a period of 7 years of time. Matured deposits. Deposits became matured, but it was not claimed, again unclaimed and unpaid for a period of 7 years from the date it became due for payment. Matured debentures, the same category applies, the same criterion applies for this also. Matured debentures with companies only if the amount has remained unpaid and unclaimed for a period of 7 years from the date it became due for payment. Interest accrued and amounts referred from H to J. So application money or mature deposits or mature debentures, for all these three interest which has accrued on it, it will also become deposited in this particular fund. Amount received from sale proceeds. Now, amount received from sale proceeds of fractional shares arising out of issue of bonus shares, mergers and amalgamations for 7 or more years. So if any bonus shares become applicable on those shares, or the merger and amalgamation which happens, and so if that amount is being sold and there's sale proceeds which are happening, so amount received from that also will be deposited in this particular fund account. Redemption amount of preference shares remaining unpaid or unclaimed for 7 years or more, and other amounts per refer module. Okay. Utilization of funds. So before I come to utilization, let me check if there is something which your module has to say further about it. 1 second. We discussed the UDA account. We discussed preparation of statement. Okay. This seems fine. Punishment also we discussed. We discussed the declaration on this. Credit. Okay. So basically, your module has given a little more detail about it, that what are the amounts. So, for example, it says the amount given by the central government. It says the amount given by the central government by way of grants after the due apportionment made by the parliament. Then again, as we have discussed donations here, it says that donations given by central government, state government, companies, or any other institutions for the purpose of the fund. Then amount lying in the unpaid dividend account, UD account, which is transferred by them to the fund under section 124, subsection 5. Amount in the general reserve account of central government, the amount in the general reserve account of the central government, which has been transferred to the account under section 205A, subsection 5 of the Companies Act 1956. So Companies Act 1956 was in place before your Companies Act 2013. So whatever amount which has been transferred as per that Companies Act, it stood immediately before the commencement of Companies Amendment Act 1999, and remaining unpaid and unclaimed as per the commencement of your Companies Act 2013, that will also be considered. Amount in IEPF account, this is the amount lying in the Investor Protection Amount Fund under subsection 205 of the Companies Act. So whatever amount is lying over there, that will also be considered. Income from investments, that is received, interest or other income received out of the investment made out of this fund. Okay. Amount received through disgorgement, with if we have to understand the detail, the amount received under section 38 subsection 4, that is amount received through disgorgement or disposal of securities seized from a person who has been convicted of personalization of acquisition of securities as provided in section 38 subsection 3. So basically he has impersonated somebody and he has tried to kind of disgorgement or disposal of securities. In that case, whatever amount is seized will go again in this IEPF account. Application money received by the companies for allotment of any securities and due for refund only if such amount has been remained unclaimed or paid for a period of 7 years. Okay. Then application money, then matured deposits from companies other than banking companies only if such amount has remained unclaimed and unpaid for 7 years. This we discussed. Mature debentures, the same criterion apply, interest on the amounts which we have referred to from H to J. Amount received from sale proceeds, we have discussed. Redemption amount of the preference shares remaining unclaimed or unpaid for 7 years or more, or other amounts. Okay, other amounts may, what all we can consider, such other amounts prescribed in Rule 3 of the Investor Education and Protection Fund Authority. They are as under all amounts payable as mentioned in clause A to N. Clause A to N. So these are clause A till N. So whatever amounts have been mentioned here, or section 125 subsection 2 of the Act, then all shares in accordance with section 124 subsection 6, that is all shares in whose dividend has not been claimed or paid. So all the shares pertaining to these section 124 subsection 6 says all shares in accordance with section this, that is to those shares whose dividend has been not claimed. All resultant benefits arising out of those shares as mentioned, and all grants, fees, charges received by authority under these rules, all sum received by the authority from such sources, all income earned by the authority in any year, all amounts payable as mentioned in subsection 3 of section 10B of the Banking Companies Act. All other sums of money collected by the authority as envisaged in the Act. So overall, it is taking and encompassing all the amount of money which can be relatable to the shares whose, in respect of which the shareholder or the entity has not claimed the dividend, and relating to it any amount, whether it is interest, whether it's shares, whether it's application money, whether it's deposit, debentures, preference shares, anything. And over and above it, whatever is included with respect to those shares will be kind of deposited in this account. Now, what is the utilization of the fund that can be done? So basically, the refund of unclaimed dividend, matured deposit, matured debentures, the application money due for refund, and interest thereon. So whatever amount has been parked in this particular fund, this fund can be used to disburse in case that is claimed by the shareholder from the particular authority, provided all the particular documents or requirements have been complied with. Refund of unclaimed dividend, matured deposit, matured debentures, application money due, refund, interest thereon, everything shall be given to that particular Okay, thank you. So we were discussing that what would be the utilization of investor protection and basically investor education and protection fund. What all things it can be used. So basically, the refund of unclaimed dividend, matured deposits, matured debentures, the application money due for refund and interest thereon. So whatever amount that has been transferred to the investor education and protection fund for the same thing, for the same purpose, it can be further backwards utilized for the purpose of disbursement of that dividend amount which was not claimed before, or the mature deposit that was not claimed before, mature debentures that was not claimed before, application money that was lying, or the refund, or the basically application money for refund, or the interest thereon. Now, promotion of investor education, awareness, and protection. So basically, we understood earlier that some of the investors may not be knowing the rights, and they may not be so much technically equipped, or may not be financially equipped to understand their rights, and may not be aware of their rights. So for that purpose, this fund can be utilized for promotion of investor education and awareness. Distribution of any discharged amount among eligible and identifiable applicants for shares or debentures who have suffered losses due to wrong actions of any person in accordance with the orders made by the court which had ordered disgorgement. So somebody impersonated somebody and tried to claim it, and then the court ordered not to be disbursed, and somebody suffered losses because the actual owner suffered losses because of that. So to kind of set off those losses or undo the wrong which has been done to that person, this fund can be utilized. Reimbursement of legal expenses incurred in pursuance of class action suits under section 37 and 245 by members. Basically, reimbursement of legal expenses which are incurred in pursuing action suits, debenture holders or depositors as may be sanctioned by the tribunal, and any other purpose incidental thereto in accordance with the rules framed under the Investor Education and Protection Fund Authority, accounting, audit, transfer, refund rules. So when this clause gets added, any other purpose incidental thereto in accordance, so this will encompass any other kind of use which is incidental in accordance with the rules framed under the Investor Education and Protection Fund Authority. So what are the other provisions governing the IEPF? The other provisions governing the IEPF are constitution of authority for administration of the funds. So what does your module says? Let's just have a look at that also. Other provisions and utilization of fund. Okay, so constitution of authority of administration fund. So what does it says? Other provisions with respect to constitution of authority for administration fund. In terms of notification dated 13/1/2016, the Ministry of Corporate Affairs has notified subsection 5, subsection 6, except with respect to manner of administration of fund, and subsection 7 of section 125 of the Act. With this notification, an authority is being constituted for administration and maintenance of accounts as well as other relevant records of the fund. Further, with the notification of IEPF authority, appointment of chairman and members, holding of meeting, and provision for offices and Officers Rules 2016 on 13/1/2016, the Secretary, Ministry and Corporate Affairs shall be ex officio chairperson of the authority. So basically, it is talking about the constitution of the authority, how it will be framed. They have mentioned that notification that was floated, dated 13/1/2016, Ministry of Corporate Affairs has notified that with respect that subsection, basically 5, 6, and 7 will deal with it of section 125, and with this notification, an authority is being constituted which will administer and maintain these funds. It will deal with chairpersons, it will have members, and they have also categorized which people can be part of this committee, basically. Then we come to the provisions of required resources. Provision of required resources by central government for administration of the fund. Provision for required resources by central government for administration of funds provide that authority, such officers, employees, and other resources in accordance with IEPF authority. Appointment of chairmen and members, holding of meetings, and provisions of officers and officers. So basically, it will deal with how they will be appointed and how the committee will be formed and how the meetings will be held. And all these things are covered in provision regarding provision of required resources by central government for administration of the fund. Authority to work in consultation with CAG, that is Comptroller and Auditor General of India. That is, the authority shall administer fund and maintain separate accounts and other relevant records in relation to the fund in such form as may be prescribed by after consultation with the Comptroller and Auditor General of India. Spending of money. So the authority shall be competent to spend money out of the fund and carrying out the objects specified in section 125, section 3, that is purpose for which fund has been utilized. So money shall only be spent with respect to the categories that has been elaborated with respect to which this fund has been created. Preparation of audit of fund. Again, it will be audited by Comptroller and Auditor General of India, and at such intervals as may be specified by him. Such audited accounts together with audit report thereon shall be forwarded annually to the authority, to the central government. So whichever authority the central government has framed for the purpose of administration of this fund, that shall be forwarded to that particular authority of CG. Preparation of annual report by the authority. For each financial year, authority shall prepare in prescribed form and at prescribed time its annual report giving full account of its activity during the financial year and forward a copy thereof to the central government. In turn, central government shall cause the annual report and audit report given to the Comptroller, Auditor General of India to be laid before each House of Parliament. So basically, annual reports shall be prepared in the prescribed format, in the prescribed at the prescribed time, and it shall be forwarded to the central government, and the central government can lay it before the both House of Parliament to be viewed or maybe to be approved or whatever the situation may be. So we will take here around 5 to 6 minutes of break, and then we'll resume to the last portion of it, that right of dividend and right of the dividend, right shares and bonus shares to be held in against pending registration of transfer of shares. And then we will reach to the punishment for failure to distribute dividends within 30 days. So this will be the last portion of our basically declaration and payment of dividend. So we resume after 5-10 minutes. Okay, so we were discussing the investor protection, education and protection funds, and we understood what all amounts that can be deposited, what are the utilization of those funds, and other provisions relating to IEPF. Now, punishment for failure to distribute dividends within 30 days. So what does Section 127 says with respect to non-compliance if it is done with respect to the payment distribution of dividends within 30 days of time? It says that what is the time limit? It says where a company declares dividend, it must be paid, or a dividend or the dividend warrant must be posted. Now, this is important that it has to be posted within 30 days from the date of declaration of dividend to the shareholders entitled to the same. Posting of dividend warrants within 30 days absolves the company from any punishment, irrespective of whether it is received by the shareholder concerned within that time or not. This offense is committed only when the company fails to post the dividend. So posting of dividend within the stipulated time period of 30 days is important. It is not being mentioned in law that it has to reach the particular shareholder within 30 days of time. So if the company is able to produce substantial proof with respect to the posting or disbursement of dividend warrants within 30 days, they are good to go and the offense is not committed. Non-receipt of dividend warrant by the shareholders within the prescribed time does not attract any penalty or punishment. Punishment for failure in case company fails to pay dividend or fails to post dividend within 30 days of declaration, following punishments are applicable. Every director of the company shall be punishable with imprisonment up to 2 years if he is knowingly a party to the default. And he shall also be liable to a minimum fine of 1,000 for every day during which such default continues. So there is imprisonment also, there is cash fine also. The company shall be liable to pay simple interest at the rate of 18% during the period of which such default continues. So this is the punishment in case of failure to distribute dividend within 30 days of time period. And this these failures, we have understood that when we are not following the timelines and the prescribed rules and regulations as has been laid down with respect to the flow of declaration of dividend being transferred to UDA account, from UDA account it is going and floating to IEPF account, how and when it should float, and what is the time within which it should go, and what is the rate of interest. This has been dealt in here. Non-compliance of this we have discussed here, what we studied here. And with respect of non-payment of dividend within 30 days of stipulated time has been mentioned here. Exemption for punishment. Now, exemption from punishments are to the dividend could not be paid by operation of any law. So, if suppose any law comes in force and that makes the operation of distribution of dividend impossible, then in that case, second, shareholder gave the direction regarding payment of dividend and those directions cannot be complied with the same has been communicated to him. Now, suppose a shareholder gave the order to be paid to one particular identity, maybe company, maybe banker, maybe an individual. That person does not become traceable, or it was given to a banker and that banker or the bank get wound up, or that person is not traceable, or the address which was mentioned or the contact details that were mentioned were not correct. So in all those criteria, the exemption shall apply, and also says that has to be communicated to the person. It is dispute regarding the right to receive dividend. If suppose when the dividend becomes declared, there is a dispute with respect to who is the actual claimant of the dividend, then in that case, this punishment shall not apply. A dividend has been lawfully adjusted against any sum due from the shareholder to the company. So in case there has been some amount that was due from the person, from the entity, and against which this dividend has been adjusted, then there is no punishment with respect to section 127. Or for any other reason, the failure to pay post-dividend warrant within the prescribed time was not due to any fault on the part of the company, where it can be proved that it was not due to the part of the company, then in that case, it is exempt. Now let us understand one numerical. It says Mr. Ashok holding equity shares of face value 10 lakhs has not paid 80,000 towards call money due on shares. Can the dividend amount payable to him be adjusted against such dues? Give reasons for your answer. Yes, it can be, because he has not paid the amount on call money which was due on his shares, and as per clause D of proviso to section 127, where the dividend is declared by a company and there remains calls in arrears or any other sum due from a member, then such dividend can be lawfully adjusted by the company against such dues. Such action of the company adjusting dividend payable to Mr. Alok towards call money due on shares amounting to 80,000 is justified, and therefore no punishment will be attracted. What is the applicability of section 127 to nidhis in terms of notification? 127 dealing with punishment shall apply to nidhis subject to the following modification. In case dividend payable to a member is 100 or less, it shall be sufficient compliance of the provision of section 127 if the declaration of the dividend is announced in local language in one local newspaper or wide circulation, and announcement of the said declaration is also displayed on the notice board of the nidhis for at least 3 months. Okay, so this is a theoretical part. There are certain numericals which have been shared in your module at the end. So let's try attempting them. If we are not able to touch base all of them, we'll try to do at least some of them. Okay, so it says the annual general meeting of ABC Bakers was held on 30th of May. Okay, so it says the annual general meeting, AGM of ABC Bakers held on 30th May 2019. Declared a dividend at the rate of 30%. Dividend was declared at the rate of 30%, payable on its paid up equity share capital as recommended by the board of directors. So this was recommended by board of directors. Okay. However, the company was unable to post the dividend warrant to Ranjan, an equity shareholder, up to 25th July. They were not able to do it till this date. Okay. Mr. Ranjan filed a suit against the company for the payment of dividend along with the interest of 20% for the period of default. Decide in light of the provisions of the Company Act 2013 whether Ranjan would succeed. Also state the director's liability in respect to the act. So within 30 days, it has not been paid, right? The section 127 of Companies Act. So we see, on 30th May it was declared till 25th of July. It does not count, 30 days. So basically, it has to be paid within 30 days. It has not been 30 days have not been passed. So ideally but has not paid the warrant, has not been posted within 30 days from the date of declaration of shareholder. Then let's read it from the beginning. Section 127 of the Companies Act 2013 lays down the penalty for non-payment of dividend within the prescribed period of 30 days. According to this section, where a dividend has been declared by a company but has not been paid, or the warrant in respect of which has not been posted within 30 days, then in that case, every director who is party to it shall be liable for punishment, imprisonment for 2 years and fine up to 1,000 rupees for each day when the default continues, and interest shall be paid at the rate of 18% by the company. Right. Therefore, in the given case, Ranjan will not succeed if he claims interest of 20%, as the limit of section 127 is 18%. Now he is claiming interest rate of 20%. Okay. So this is 30th of May and this is July. I was perceiving it as May. So this is 30th May. This is 25th of July. 30 days have passed, right? So non-compliance has happened, but company is only liable to pay interest at the rate of 18%, and he is claiming an interest of 20%, so he will not be liable. When you are answering this type of questions, it is very important you cite the section. You write, if any particular subsection is mentioned, you have to cite the subsection and mention the different clauses in detail, like we have done in our module, that what is the liability of the director, what is the liability of the company, what is the interest allowed, and then conclude and come to the conclusion that this is the conclusion as per the provisions. Okay. Now let us come to the other question. It says the Board of Directors of Future Fashions Limited at a meeting recommended dividend on its paid up share capital, which was later on approved by the shareholder at their AGM. So Board of Directors made a recommendation. AGM was approved. Thereafter, the directors at another meeting of the board passed a board resolution for diverting the total dividend to be paid to the shareholders for purchase of certain short-term investments in the name of the company. As a result, dividend was paid to the shareholder after 45 days. Examining the provisions of the Companies Act 2013 state whether the Act of Directors is in violation of the provision of the Act, and if so, state the consequences. Now, according to Section 124 of the Companies Act 2013, where a dividend has been declared by the company but has not been paid or claimed within 30 days from the date of declaration, the company shall within 7 days from the date of expiry of the said 30 days transfer the amount which remains unclaimed or unpaid to a special UDA account. Further, according to Section 127 of the Companies Act, where a dividend has been declared by a company but has not been paid, or the warrant in respect have not been posted within 30 days from the date of declaration, every director shall be liable for imprisonment or the punishment that has been laid down. In the present case, now we'll come to the present situation. Board of Directors of Future Fashion Limited at its meeting recommended a dividend that was approved by the AGM. Thereafter, directors at another meeting of board decided by passing a board resolution for diverting the total dividend to be paid to the shareholders for purchase of certain short-term investments in the name of the company. As a result, dividend was paid to the shareholders after 45 days. Since the declared dividend has not been paid within 30 days of the date of the declaration, it is immaterial whether they have, kind of diverged into a separate investment or short-term investment kind of criterion. But it just says that since dividend has not been declared within 30 days, within 7 days from the date of expiry of such period of 30 days, it should have been transferred to UD account. Board of Directors have violated Section 127. Now, what will be the consequences? Consequences will be every director who is party to it will be liable for punishment of imprisonment for 2 years and 1,000 rupees penalty for each day of default, and the company shall be liable to pay interest at the rate of 12% of the amount not paid. So we come to the third question. Referring to the provisions of the Companies Act 2013, examine the validity of the following. Board of Directors of ABC Tractors. Let's go. Okay, it says ABC Tractors Limited proposes a declared dividend at the rate of 20% on equity shareholders, despite the fact that company has defaulted in payment of public deposits accepted before the commencement of this act. So the company cannot declare dividend because any company which is in default of payment of its public deposits has been specifically categorized as prohibited companies for the purpose of declaration and payment of dividend under Section 123, subsection 6. Under Section 123, subsection 6 of the Companies Act specifically provides that the company that fails to comply with the provisions of Section 73, prohibition of acceptance of deposit from public, and Section 74, payment of deposits, etc., accepted before the commencement of this act, shall not, so long as such failure continues, declare any dividend on its equity shares. Okay. In the given instance, Board of Directors of ABC Tractors Limited proposes to declare dividend at the rate of 20% in spite of the fact that they have defaulted. So it will not be legitimate. Let us come to the next question. It says Star Computers Limited declared and paid to all its equity shareholders for the financial year 2018 and 19, except for the following two cases. Mrs. Sheila Bhatt. She was holding 250 shares and had mandated the company to directly deposit the dividend amount in her bank account. Okay, she gave instruction to be deposited in the bank account. The company accordingly remitted the dividend, but the bank returned the payment on the ground that there was a different surname in the pay in the bank records. The company, however, did not inform Mrs. Sheila Bhatt about the discrepancy. So, if we see our rules, it says that in case that there is shareholder gave the directions to be paid in the payment of dividend, and those directions cannot be complied with the same, and the same has been communicated. So communications is really, really important. In this case, the communication was not done. So what will happen? Under Section 127 of the Companies Act 2013 provides permission for failure to distribute dividend on time. One such situation is where a shareholder has given directions to the company and the payment was not done, and those directions could not be complied with, but the non-compliance was not communicated. So communication is lacking. Mrs. Sheila Bhatt has not been communicated. In the given situation, the company has failed to communicate and the non-compliance has therefore occurred. Hence, penal provisions under Section 127 will be applicable. Dividend amount of 50,000, second case is dividend amount of 50,000 was not paid to the successor of late Mr. Mohan in view of the court order restraining the payment due to family dispute. This will be eligible because we have seen that in case law prohibits operation of any law which prohibits the payment, then it will be exempt. So in this case, in this situation, Section 127 provides no offense shall be deemed to have been committed where dividend could not be laid by the reason of operation of law. Coming to the next question. Question 5 says that Alpha Herbals, a Section 8 company, is planning to declare a dividend in annual general meeting. Section 8 says charitable. Now, charitable companies have been prohibited from making the declaration and payment of dividend. Mr. Chopra is holding 800 equity shares as on date. State whether the act of company is according to the provisions. No. According to Section 8(1) of the Companies Act, the companies licensed under Section 8 of the Act, formation of companies and charitable objects, etc., are prohibited from paying any dividend to its members. The profits are intended only for the charitable purpose, and hence it will not be eligible. Okay. Okay, so I would, kind of go in case anybody is having any query with respect to what we have discussed till now. I'll be open to answer those queries. If anybody is having that, I'm more than happy to answer them. Or probably Institute will also share with you a link wherein you can upload your queries, and I'll be answering those queries. We'll be also uploading certain assignments for you to take up that will help you revise the concept and understand your kind of understanding with respect to subjects. If you have any query, I'm more than happy to answer those queries, or probably you can put it in your portal also. Okay, I think so. We are all good right now. So since we have some more time left, we will quickly kind of take up some more questions. Okay, so one question which has been raised is that what would happen that in case any shareholder is raising demand for any dividend, and as per it's a preference shareholders, and the preference shareholder is kind of it's a non-cumulative preference shareholder, and he is asking for the payment of the dividend. What would happen, whether the dividend will be paid or not? So the student name I'm missing out here because it's just dropped down. So actually, in case if it is non-cumulative shares, so as we have discussed, they will only get the dividend on their shares provided they have been the cumulative shareholders. If it is non-cumulative shareholders, their dividend will not be carried forward for other years. Depending upon the provision and availability of free years next year, that will be checked, and then only disbursement will be made. Right. So this is one of the questions that has been raised, and yeah. So as of now, the other question which comes is, can the penal interest be raised from 18%? No. So as of now, 18% interest has been fixed, and in case there is any change which is brought about, then those changes will be incorporated in law, and then only the amount of interest on that amount which has been not been disbursed can be increased. Okay. The third question, which is coming up, it's some of the students are asking whether the timelines that has been fixed over here, 7 years or 5 years or 30 days, is it stringent? Yes, they are very much stringent. They cannot be extended beyond it. So yes, they can be deposited before that, but not beyond the timelines that has been mentioned. Okay, so I am not seeing any query as of now. I'm open to, yes. So again, the rates, which average rate calculation, which they are talking about. So average rate calculation has to be done with respect to 3 years immediately preceding the 3 previous years. So as we have done in our previous section, in previous class, so if I have to consider dividend for 21-22, the question is which year's rate we will consider. The law talks about immediately preceding previous years. Okay, so for example, we are considering financial year 21-22, so we'll consider 2021, 19-20, and 18-19. And the law says that in case in any of these financial years the dividend has not been declared, then that clause will not be applicable. So any other questions, I'll be more than happy to answer. Otherwise, I'll be concluding the session by signing off. I think so. We are all good. We have covered all the chapter details, and I would request you all to go through the details of the chapters thoroughly. I have tried to touch base all the numericals, most of them. If at all there has been any repetition with respect to the questions, I may have not taken up in the class. All the concepts have been touched base with. I have kind of summarized and put it in the form of presentation, which I'll be uploading at ICAI site. So you will be getting access to it most probably, depending upon the link which has been shared to you. You can go through it. You can post your queries. I'll be more than happy to help you out. And I think so this session was helpful to you to kind of summarize the concepts with regards to declaration and payment of dividend. As you will revise these concepts, it will get more sunk in your mind, and at the same time you may have some more questions which are popping up when you read and revise them. So I thoroughly enjoyed this session and hope to see you in some sessions again. All the best from my side, and prepare well. Thank you so much.